And I think you're going to see these few last things happen before we get to our lows. And then, all right, welcome to Talking Investing. I'm Tom, and as always, this is not financial advice. Today, I want to talk about the markets and potentially hitting new lows, but most specifically, I want to talk about a conversation that we had on last Friday's live stream. So that is 1 week ago. So we had a conversation and talked about something, and I think it was pretty much right on point, and I want to go through what it was, why we talked about it. I'm going to show you what it was. I think there's an important lesson inside of that. So I just want to take a minute and talk about that and take a look at the market and see where we may be going from here. So if you're new to the channel, remember to subscribe and hit the notification bell. Also, if everybody could please smash the like button, it helps the channel out a lot. You can also now become a member by hitting the join button, and you get some extra content. And in addition to the Friday live stream, which you're going to see a clip from today, there's also a Tuesday live stream for members only. So, okay, so quickly before I go to that clip, I want to take a look. S&P 500 was down 1.5% at the end of the day Friday. So Friday was September 30th. It was also the end of the quarter. So we finished at some new lows on the indexes. The Dow was down 1.7%. That finished at a new low. The NASDAQ was down 1.51. That hit its 52-week low on the day. I'm not sure if it closed there. And same thing with the Russell 2000. So everything is down. The market's been red. We know we're in a tough market right now. Let me roll the clip.
Oh, Eric said it. Do you really think Apple is going to drop 20% from here? Really? And then I went to the market cap of Apple. The market cap as of close today from Yahoo, if it's wrong, don't yell at me, yell at Yahoo, is $2.418 trillion. So
right.
They could lose $50 billion, and I still think they would be overvalued personally. So yes, I actually do think that's possible. And yes, I am the person that is hedging that it's going to go down.
I don't know who asked you that, but there's a reason they asked you that, because the market can't get down to where you're saying unless Apple goes down. Apple's holding the market up right now.
Right.
Microsoft's at its 52-week low. Google's at its 52-week low. Apple is nowhere near its 52-week low. But I have to agree with George. I could absolutely see a 20% pullback in Apple. I mean, at $2.4 trillion, that's just, they turned $2.4 trillion into $2 trillion. Bang. Okay, so that's just a 1-minute clip from a conversation that we had, again, 1 week ago. So at that time, we were talking about, could the markets hit new low? And we were talking about Apple. The iPhone just came out, and sales, pre-sales and sales seemed great. And yeah, we were talking about potentially Apple pulling back 20%. And I know that a lot of people on the live stream were confused as to why we were having that conversation. So shout out to George, who joins us every Friday on the live stream. And he brought this up. Actually, somebody on the live stream asked the question, and George kind of pulled the answer there and said that, yeah, he does think Apple's going to have a 20% pullback, and I kind of agreed with him. So I want to give an update. We're basically halfway there already. Apple's had a 10% pullback since that conversation, and things have unfolded just the way that we expected. And I will tell you, my main reason for thinking that Apple had a chance for a 10 or 20% pullback is not that Apple's doing a bad job, and it's not necessarily that Apple's overvalued. It's what I talked about on the live stream, which was the market is having a down cycle. There's almost no place left to hide. Apple was one of the very last places to put safe money, and you could see it was already under attack at that point. So in order for the market to hit new lows, like I had talked about, a lot of the other big stocks, the top 5 biggest stocks in the stock market, some of those were already at their 52-week lows. So really, to drag the indexes down below their summer lows, Apple was going to have to participate in the pain. And the other one that I'm going to mention on this stream is Tesla. Tesla is nowhere near their 52-week low, so I would say also they have some room to the downside. Just as an aside, and I don't want to get too sidetracked, but Tesla rolled out their robot yesterday, and I do not think people were impressed at all, and they started talking about maybe a 5-year time frame. So all that may be big things to come in the future of Tesla, but in the short term, as the market continues to pull back, and as the indexes try to find a bottom, Apple and Tesla are 2 spots for sure that there's some potential room to the downside because they're nowhere near their 52-week lows. So sometimes when you're trading in the market, it's not all about the fundamentals. It's not all about the technicals. In this instance, this leans more towards a technical argument where the sentiment is very negative, and we seem to be revisiting our summer lows. So, in order to get there and in order to take those out, this is really the only way it can happen, right? Very small market cap stocks can't move the market to that extent. So there's only, 15 or 20 stocks that have the ability to move the indexes, and Apple is the biggest stock in the entire US stock market. So of all the stocks, that's the one with the most power to move. Apple is a component of the Dow, it's a component of the S&P 500, and it's a component of the NASDAQ. So there's a company that can move all three of those. So that's why we were having that conversation, and that's why it looks like, I don't know that we'll get to the full 20%, although I still think we will. We already did have a 10% pullback. That's $200 billion of market cap lost since we had that conversation just 1 week ago. So if we look at Apple here, you'll see they're down to $138. Their 52-week low is $129. So they're not even down to their 52-week low yet. And this is after the last week of getting beaten up. So I just want to show you a few things on the Apple chart. So this is Apple on the 1-day time frame. So in the last 4 trading days, from its high to its low, Apple moved over 10% to the downside. That's about 10.8% from top to bottom just in the last week. So it's no stretch of the imagination to imagine that it could end up being 20% down. It's already down over 20% from August. We were having that conversation after the market closed on September 23rd. So it's from there that I need to measure 20% to see what that would mean. So the first thing is to get to its summer lows. So Apple has not even taken out its lows from this summer. So Apple would have to go down a total of about 14%, and it's already down most of the way. So that would be a 14% move just to get to its summer lows. In order for Apple to be down 20% from just last Friday when we had that conversation, Apple would have to get down to a $120 stock price. So it's trading right now at $138. It did get down to $129 this summer on its lows. So all it would have to do is get down to $120. So if we are going to set some substantially lower lows on the market, and the Dow Jones and the S&P 500 in particular have really taken out their summer low already, and they seem to be headed down. So we don't know where the bottom is, and this could just be a retest. But the point being, it's not too hard to imagine Apple at 120. It's actually not too hard to imagine Apple below that. I'm gonna zoom out just a little bit more. Okay, I've zoomed out to the 1 week time frame, and I've just added a green line. So you'll see that is in March of 2021, not March of 2020 when we had our situation. This is a year later. Apple was at $116. So it would be no surprise at all to me for it to pull back into the 120 or retest that 116 level. Just to really put things in perspective, when we did have our little international disaster back in March of 2020, Apple was down in the 50s. Apple was trading at about $55. To think that it would pull back to 120 and retest that level, it's not at all unrealistic. That would mean that it lost $400 billion of market cap in just 1 or 2 or 3 weeks, but these are the types of moves a stock like Apple makes. And these are the volatile moves in the extra large cap stocks that start to happen as we form a new bottom. So that's why I've been calling, I think Bitcoin has already bottomed. I think we're in the bottoming out process for the rest of the market. I don't know if we're exactly at the bottom. We're clearly retesting the lows. We may go a little lower, and I think you're going to see these few last things happen before we get to our lows. So really my important takeaway of this whole thing is long before the economy starts to recover, we're going to see the market itself bottom out. And these are the types of signals that we're going to be looking for to look for a bottom. So I'm going to talk more about this in the future, but I just wanted to follow up on that conversation. It was a quick conversation we had a week ago on the live stream, and I thought it was interesting how things have played out since then. So let me know your thoughts in the comment, and obviously you're welcome to join us on the live stream. We do a live stream every Friday after the market closed. This last week is actually the only time we didn't do it on account of the hurricane. But otherwise, every single Friday, you can join us after the market closed. And if you hit the join button and become a member of the channel, you can also join us for our live stream for members only every Tuesday after the market close. So thanks so much for watching, and we will see you in the next video.